If I had to buy one stock from the Magnificent Seven, that would definitely be Google. The P ratio is just 22 compared to the other 40, 50, 60s. The earnings are there, growing, we are constantly using it, you're using it now as you're watching me on YouTube. Thanks for doing that and smash that like button. So as you're watching, Google's making more and more money, but that isn't really reflected in the stock price because we had a boom, a bust, and now we have again a decline based on the Department of Justice investigation, lawsuits and things like that. But as the dogs are barking, the caravans are passing, and the company keeps on growing 15-16% per year, is growing everywhere, 45% in cloud. So they are just keeping on doing Google's business, net income increasing 34-37% thanks to the buybacks they are doing, and the buybacks are at a relatively low price compared to the rest of the market. So revenues, all good, all is improving. This economy is really pushing Google to do good things. And they are also improving their Google search basics. So there is more than 14% growth on revenues that is then reflected in earnings. And I was just looking for a flight for next year to go somewhere in Europe. And if you type in EasyJet, you have first 1, 2, and 3 sponsored results that come into Google. All they bring dollars to Google. So if you're a Google shareholder, you first click these freeze and then you go to check what you want to check. Of course, there are some concerns like the Department of Justice going into Google, trying to break it up, fines, etc., etc. But in the meantime, you're still watching YouTube. They can't force you to watch me somewhere else. So therefore, whatever happens, there will be ups and downs. This will then 2-week hearing in April, etc., etc. We'll see how Trump might change that story there. We'll see how it works, but no matter what, Google is likely to keep on growing. So we have estimates for further growth going forward in earnings per share, and same for the revenue, and that is all of Wall Street plans for Google to keep on growing 14, 12, and 10% going forward. And it's hard to see a reason why not. Of course, there are risks, so we can have a recession, less spending on advertisement, less we flying around the world, thus less clicking on that skyscrapers or whatever. So that's one that would then halt the growth, but long term, Google should keep growing. The key risk that I see, and that is AI not delivering as fast as one could expect, and also AI shifting my search for flights into somewhere else, just telling my computer, hey, where are the flights for that, that, and that? And that might not be Google 2, 3, 4, 5 years down the road. That's the key risk I see. Google is investing a lot into AI, so it might again be Google because of their already strong position. But that is one risk that says, okay, for now, that's something to watch, how people start using AI into their environment. As long as Google is doing their thing and you still type there whatever you're searching, then everything is fine. And that's something, if you're a Google shareholder, you have to just watch it. There will be enough time from when AI is significantly impacting Google, if it is, and the stock price not going up. That's something you have to just watch as a shareholder. And then the stock will just keep going up because there are no risks in the market, but the stock is really cheap. As said, consensus is 10 in 2026, and if Google reaches 10 in 2026, P ratio of 22, maybe it goes to the market's 30, 10, that's a 300 stock price. So I think at 22 at 10, we are already at 20. 20 at 22 and a P ratio of 30, we are at 300 by 2026, which is a really good return from now. And that's why, all else equal, I would buy Google from the Magnificent Seven. They are doing repurchases. This is for 2023, same number there for 2024, so all good there. Of course, it is 60 billion on 2 trillion, that's 3% buybacks, 47%, 3.5% earnings yield. That's in line with the market, but don't forget the 10% plus growth rate that Google offers. Now, Seth Klarman also owns Google, but look at what he's doing. So he purchased Google, sold Google, purchased Google, then sold again the shares. So when Google stock went up, then when Google stock went down, he bought again, then he again sold, and now that Google stock went down, he bought again. A very interesting approach to Google from Seth Klarman, the great value investor, that simply knows what Google is and watches the market panic, buys low. When it gets to 30, 40, then he sells. And here we have a good representation of Google's PE ratio that went down to 20 as we are now. Seth Klarman bought big, went up to 26, Seth Klarman sold, and now we are at 22, which is again on the lower side historically, and it could really go up. In the meantime, earnings just keep on growing. So if I put Google on my value investing quadrant, all else equal, we have 3.5% yield, we have 10% growth going forward, and that growth pushes Google to a really good buy here on our quadrant. All else equal, Google is 250 in 2026, and I'm not going to talk about recessions, that's not cool to talk about, which would then lower the growth, hamper the growth, and maybe put the return somewhere here for Google, a little bit less risk, I think, from the market. So let's put Google somewhere here, but just for the exuberance side, and the short term, let's put it on a high return, medium risk. So all else equal, Google is 260 in 2026. Why am I not buying it like crazy or like Seth Klarman? Because yes, people are using Google and everything, but there is always that tech component, the AI, how it will work, that simply doesn't make me sleep well at night. And I personally have good investments that should return similar returns. So we can't be invested in everything. I'm much more concentrated, like what I own. So if you like owning Google, it's a buy. Thanks, and I'll see you in the next video.